We're back for another update. Let's take a look at Bitcoin here today. Now, Bitcoin isn't making any definitive moves to the upside or to the downside. You guys can see that we've been ranging since July 14th. We came down to the lows of the range, swept the lows, then we came up to the highs of the range, and then swept the highs. Now we've moved back into mid-range, back testing the 21-day moving average, and there is a possibility we come down to the lower quadrant of the range again to tap into the 50-day moving average, sitting at around 115,196. So if Bitcoin comes down over here, don't panic. It's likely we're just coming down to retest this 50-day moving average. So now in regards to the Elliot wave count, we would be thinking that this over here is your A wave, this is your B wave, and this could be a C wave for a running flat before we continue on higher. But in the case that we lose the 50-day moving average sitting at around 115,196, then it's likely we'll tap into the 100-day moving average at around 110,451. Now you not only be tapping into the 100-day moving average, but you'd be tapping into this FEG that was created on July 9th. Do you guys see this gap over here? Okay, tapping into this July 9th daily FEG, you'd essentially be tapping into or backtesting the May and the June highs, right? These are the May and the June highs, so coming down for a C wave before continuing higher wouldn't be something out of the ordinary. I also mentioned that on my August 3rd chart. When we were down here, I did say there's a possibility we tap into this FEG that was created on July 9th and tap into the May and the June highs before we have healthy continuation higher. However, we didn't quite get that, right? We just came down to the 50-day and then we saw a move up. But now we're seeing a move back into the range. So there is a big possibility that this over here could be a B wave, and then we have a C wave to fully tap into what I was trying to show you guys on August 3rd. So this region right here, we could be tapping into it. Okay, so if we end up losing 115,196, which is the 50-day moving average, then it's likely we'll come back down to tap into the 100-day moving average, the FEG that was created on July 9th, along with turning previous supply or previous resistance, which was the May and the June highs, into support. Now, if we take a look at this on the macro, what do we have here? We have a left shoulder, you have your head, and then you have your right shoulder. But when have we ever back tested the neckline of this inverted head and shoulders pattern? We tapped it here a slightly, but I'm looking for something a little bit more deeper to fully back test this neckline, right? So whenever you have an inverted head and shoulders, this is your left shoulder, this is your head, and then this is your right shoulder. When you see the breakout, yeah, you could do this, but you're not fully back testing into it. Usually what you see in crypto is it's usually never a tap and go, right? What usually happens is you kind of wick down below the trend line, right? So that's why I always place two trend lines on the chart. So if we were to just remove this, you could say, oh yeah, the neckline was tapped into. But I always place two trend lines on the chart just so we can add that buffer, okay? So coming down here to fully backtest the neckline of this inverted head and shoulders wouldn't be something out of the ordinary before we can have continuation higher, okay? So just remain patient. Let's just see how the rest of the day plays out, especially going into the weekend. Remember, with weekend, we have less liquidity. And in regards to the Elliott wave count, this could be a running flat in which the C wave fails to terminate beyond the bottom of your A wave, and then we go off from there. Or it's an expanded flat in which the C wave terminates below the bottom of your A wave, and then we pop off from there. So you'd mainly want to be looking at the 21 and 50-day moving average on your chart just go to the indicator section on TradingView, type in SMA, add it onto your chart, go into the SMA settings, and put the length as 21, 50, and 100 day, and then time frame should be daily. Okay, so right now we're just on the 21-day moving average. Let's not rule out the possibility of a wick down to the 50-day moving average sitting at 115, 188. And if we lose the 50-day moving average, then coming down to the 100-day moving average to backtest this structural support or this structural resistance as support, it wouldn't be something out of the ordinary. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. I'll see you guys in the next one.